Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we're going to be talking about the UK housing market. And why are we doing this? Well, I think, first of all, it's easier for me to kind of give a technical representation on the UK housing market than it is the US housing market. Although we have previously stated, and we continue to state, that we're very bullish on assets. So things predominantly like gold, the stock market, both in the UK and further afield. We had lots of targets in 2023 that we laid out that have been hit this year, like, for example, with the Dow Jones Industrial Average, the DAX, the S&P. We had many targets out there that got hit, but we're very bullish on assets. So things like gold, the stock market, of course, crypto. So the name of the channel is Allincrypto. Some of you watching this video might not be interested in crypto, but I think you should be. I think crypto is going to be the best performing asset in an environment where assets are generally going up. And when we talk about assets going up, that means they're going up against the currencies of your native country. And that equation applies not just for the assets that we've mentioned, but things like housing. So we have previously looked and stated that we're actually bullish on the UK, or the US housing market, certainly in the form of the REITs, the REITs, and the ETFs that are offered by the likes of iShares within the United States. It makes sense that housing is going to go up in an environment where assets, we're seeing the same thing, walking, talking, quacking like a duck for assets in general. But yesterday at a Patreon meeting, and I actually pulled up as a kind of confirming factor to this environment that we think we're in, UK housing ETFs, UK REITs, and they actually look pretty good. And then what I want to do in this video is use my sort of technical understanding to go further afield outside the cryptocurrency space and show you guys a technical look at the UK housing market through the lens of ETFs and REITs and various housing companies, also home builders, and things like mortgage applications, mortgage approval rates, these kind of things, and show you that it is our technical assessment when you analyze and you look at these things as a basket, that actually UK housing is about to increase significantly in price. And that would actually align very much with the kind of macroeconomic environment that we are in, that of course has been driven by largely interest rates. And housing, possibly the most interest rate sensitive market that there is. The IWM, the Russell 2000, we've been speculating was going to make a move like we saw last week. Before it made that move, we used Stan Druckenmiller, who pivoted into the IWM as a kind of barometer for being bullish on risk, or a good environment for risk. We think he's exceptionally good at what he does, and he's got the track record to prove that. Still, I have anonymous people arguing with me on YouTube, but it is what it is. And the IWM, the Russell 2000, is very much an interest, and of course that's a US smaller basket stock kind of index, if you will. But that is very much a bet on interest rates coming down. And we know interest rates are coming down, which is the fundamental reason why the demand for housing and thus house prices are going to increase. Certainly if somewhere like Scotland, where I am, if you speak to local councils, you'll find that a lot of them are going through a real sort of housing shortage at the moment. And I have a lot of sort of mortgage broker friends who I always argue with, because of course they want people to fix rates because they get commission on taking out mortgages. And I'm saying, no, don't be doing that to people because they're going to bring rates down. But they'll tell you that some of them are having some of the busiest times and that they've had in a long time. And on top of that, if you speak to real estate agents, it's a very, certainly from a rental point of view, fierce market. Also from a sort of home buying point of view. And of course, this depends on where you live in the UK. This is why I wanted to do a UK one, not necessarily a US one, because the US has however many states within it. And they all have different internal things going on. But with the UK, it's more general. Of course, the centre of London is going to be vastly different from the sort of Highlands of Scotland, or potentially that's a bad analogy because we see lots of people moving out there. But somewhere like, one of the lesser known towns in Scotland, or even in sort of North England. But generally, the fundamental reason why housing is going to do well is because rates are going to come down. Now, we know that rates have been driven up because of inflation, and it's the same reason why they get driven down. And the Bank of England's target of 2% has already been met. The next print that we're going to get for the Bank of England is going to be on the 14th of next month. The one that we had for this month came out at 2%. So right where they want the target, they've got every reason to lower interest rates, and they'll likely want to do it at a later date if they can than other countries, because of course that kind of takes away some of the wind in the Great British Pound sales. We're actually bullish on the Great British Pound against the Dixie, or the dollar, I should say, not against the Dixie. We're bearish on the Dixie, bullish on the Great British Pound against the dollar, also bullish on the euro against the dollar, which means that the Fed's very much going to lower interest rates also. That's what that's telling us. But when we take a technical look, so fundamentally there's a number of reasons to be bullish on housing in regards to interest rates. Some economists, I'm sure, can explain that. Certainly one that deals with the housing sector far better than I can. I'm sure you guys all sort of know, why housing might go up when the cost to borrow capital is more affordable. But when we take a look at some of the housing stocks out there, they very much look like what the IWM did before it saw a major move. And really, when I teach people about technically looking at the markets, I really like to simplify it down and break the markets into cycles and stages within cycles. So we teach something in our market mastery course that we've not released yet. It's only available for patrons at the moment. But we break the market down into 4 stages. It's very much the same thing that Wyckoff did with his cycle theory. So everybody, when they mentioned Wyckoff, they only talk about accumulation and the distribution schematics. Well, there was a kind of a middle and an end point to that, in the sense that accumulation, uptrend, distribution, downtrend. And what you're seeing in a basket of sort of housing products, housing stocks within the UK, is accumulation that is likely going to lead to upside at a time when they're about to lower interest rates. Interesting thing is as well, and we'll do this with you guys, is when you look at things like UK mortgage applications, a variety of things here, you're seeing the same thing. We'll explain all of this to you. Don't worry. And also when you look at things like home builders, there's a very similar thing going on. We've opened that many tabs, guys, because we've got that many charts to show you to kind of back our case in regards to being bullish on the UK housing market and expecting house prices to go up significantly. So we're not in this crash camp. We do think a crash will inevitably become the mother of all crashes at some point, but actually there's a good time, I think, for assets generally. We, and some of you may be watching this video because you're interested in the housing market, happen to think that crypto is the fastest horse in a environment where assets are generally doing well. But housing is going to do well all the same. That may be a good thing for you if you own a home. Certainly if you rent out places and you've got mortgages on those places. It may not be such a good thing if you're trying to get on the property ladder like many people are. People really do complain in the UK, but I can guarantee you, as somebody who's travelled around Europe and been to many places and has business ventures in Europe, that there's many places within Europe that are far worse from an individual citizen trying to get on the property ladder, with far lower average wages and far more expensive houses and not as greater access to sort of capital. So the UK, even though it's not a great situation for first-time home buyers, it's not the worst, certainly when you compare it with Europe. But this is iShares. So this is a BlackRock product. This is UK property UCITS ETF. This is probably one of the largest in the UK. And we're very much bullish on this chart. In fact, we think it's going to do pretty damn well. And I'm hesitant to call it inverse head and shoulders here, because this sort of left shoulder isn't the prettiest. It's not winning any contests for beauty here. But when we sort of draw this, and we're going to show you a basket, and this is going to be a slightly longer video because I really want to explain my reasoning for this, and you guys can push back with why you perhaps don't feel the same way. But when we look at this, there is definitely the potential for this accumulation to lead to upside in the housing market, certainly given the context of where rates are and where we believe they're going. So it's not a substantial move, but it is a move all the same. So this is why we're in crypto, because we think there's a similar setup in many altcoins, but they're going to, this is giving you a 22%. Altcoin's going to do significantly more. But investing in crypto, of course, is extremely risky. This is another iShares product. A bit of a horrible chart. I absolutely hate this. But again, seems to very much be bottoming and coming to, some sort of a an end to a prolonged downtrend and accumulation period. This is HSBC ETFs PLC. So this is property. Again, you can see a very similar structure to what we saw. You know, as they up interest rates, markets fall. As they're on the sort of, if you look at interest rates, you know, it's kind of an adversary chart, isn't it? They've been going up, and now they're topping, and of course, housing's been going down, and now it's bottoming. I don't also think it's too much of an outlandish call to be saying we're bullish on UK housing because of rates. I think most people could probably make that assumption, but we're showing you technically very, very plausible. And you've got similar structure potentially here that you do on iShares RET. We have another one here, which is Segro PLC ORD. Real steep decline with rates. Very much bottoming. Likely going to see significant upside and then probably even set up continuation. This is ugly. You will have, I'm sure of this, bullish divergences on all of these. And what are you looking at when you're looking at a bullish divergence? You're essentially looking at the trend being vulnerable to change. That's how I like to look at them. I don't think they're a great trade signal, by the way. I have to say that. I really don't think they're a great trade signal in the sense that when you see a bullish divergence, you get in because it often play out like that. But what it does on a weekly time frame is it allows you to kind of go, okay, well, the trend that was previously in place is now subject to change. So we're getting this on a lot of housing sort of products. Again, there's that great fundamental reason for why housing does well. This is Land Securities Group PLC. An interesting one, not the prettiest. Certainly didn't recover from the kind of March 2020. But you may be looking at something here. Certainly if they start lowering interest rates. Here's another one. This is London Metric Property. Again, you've got this kind of ceiling that you're just waiting to sort of really break through and start an uptrend once taken. And you can see there's a nice volume sort of uptick on many of these, which for me, some a lot more notable than others, shows a level or certainly a degree of accumulation taking place, certainly in regards to the London Metric Property. So we've looked at a number here. Here's Tritex Bix, Big Box REIT PLC. Again, similar thing, noticeable. You've got very clear kind of market cycles, and you're in this stage of accumulation, waiting to break out and see higher prices. And this is an interesting one. This is Hammersum ORD. I mean, you can see this really tried to break. It looks very much like the IWM, which is a kind of UK, we won't pull up our watch list, or sorry, a US basket index for stocks. And you can see this accumulation break. This is what a lot of the housing, although not in the same sort of a range fashion, it's a lot more kind of compact, a lot smaller moves, which you'd expect in housing. But very interesting all the same. So when we look at, we've spoken about fundamentally why you might be bullish on housing. We've now backed that up with technically looking at a number of housing products within the UK. Let's take a kind of sneak peek, if you will, at some UK sort of nationwide house price indexing. And you can see this very much seems to be on the turn, doesn't it? And why might that be? Why would it be turning before they even lowered interest rates? Well, remember, guys, markets are forward-looking. This is obviously the nationwide housing index. You can see, just like with these that we've just shown you, there's been obviously a decline, and now there's a kind of a basing that's taken place, and now we're getting ready to break and starting to see that upside. So this is UK National Wide Housing Index. The next one that I have for you is UK mortgage applications breaking to the upside, accumulation, or I wouldn't recall this accumulation, it's kind of ugly. This never really recovered from 2008, and I'm not sure it will, but there's certainly a break to the upside in regards to this. The next one that I want to share with you guys is the United Kingdom mortgage approvals. You can see this very much upticking. So obviously this is March 2020's events. Then you've been in a downtrend, kind of basing here, and now sort of coming a bit of a turn off here. But likely, I think with them lowering rates, you're going to see more mortgages get given. The next one that I want to share with you is United Kingdom home loans. This is a real macro chart, but we're really focused on the short term. So this is an interesting chart, but if you look at where we are, we're very much on an uptick. So that means home loans going up. We have United Kingdom RIC house price balance. Again, after a big decline, very much starting to come up. Looks like those sort of housing charts. These are home builders that all seem to be breaking out into new all-time highs. Very interesting, or certainly on the cusp of it. So what we've done is we've spoken fundamentally about why you might be bullish on housing in the UK based on interest rates and where they currently are. We looked briefly at the sort of cause for interest rates, obviously inflation, where that's currently at, and why they might want to bring rates down. And then we've looked at a basket of different stocks, whether it be REITs, whether it be ETFs, whether it be individual companies that are sort of holders of property within the United Kingdom. And we've looked at the kind of basing, the bottoming that's going on there, and the kind of point that they're at, in which they're really, in my opinion, waiting to break to the upside, which means that house prices are going to be going up. And then what we've done is we've looked at a number of things like mortgage applications, home loans, nationwide sort of indexes for housing. And then we've even looked at things like home builders. And they all seem to be pointing in that upwards direction, which very much leads me to believe that housing in the United Kingdom is going to get significantly more expensive over the coming year or so as they look to lower interest rates. Interesting video. We thought we'd use our technical abilities for something different than the cryptocurrency market, although often what we do here on the channel is we look outside of the cryptocurrency space to help us derive our opinion on where it's going. Crypto is a part of the kind of ecosystem of markets, and arguably larger markets have a lot more of a bearing in regards to what the kind of economy and the macro picture is going to do, and crypto finds itself within that kind of sea. So when we look at assets generally and they look bullish, whether that be gold, our target that we were calling for sub 2,000, 2,500 or thereabouts, very much about to get met. We then think it's going to go to 3,500. If you look at what we got right for the S&P, the Nasdaq, the Dow, Jones Industrial Average, the DAX, the Nikkei, many of these things. And what's really going on here is people are saying, take your shitty fiat back and give me something. Because we're at this kind of, I guess, awakening stage with fiat where people, don't really want it. However, in times of a crash, and I do think there's going to be the mother of all crashes coming, it just doesn't come yet, cash potentially may be king. Maybe that's how they rein everything back in. But that's it from me, ladies and gentlemen. If you've enjoyed this content, slightly different thing looking at the UK housing market, a like and a comment is always appreciated. On that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you all in the next one.